Hello and welcome to VCC TV. This is Joseph Rai, and we have with us Sandeep Aneja, Managing Partner at Kaizen Private Equity. A warm welcome to you.
Thank you.
And thank you for joining us. According to Technopack report, the education market in India is expected to rise to $180 billion by 2020 from $100 billion right now. But our internal data also suggests that the number of private investments in the education sector have dipped a bit. So it's been pretty muted, mirroring the larger PVC trends in this year compared to 2015. So how do you read this? Is it worrisome?
No, not really. I think first of all, from any perspective in a country like India, for one to imagine that education is going to be a cause for worry is not required. It's one of the largest spends that an individual household has towards whatever they spend on. Education is a top 2 spend for most households. Compared to most other markets, let's contrast it with the US, where education is number 7 spend, below entertainment. Right? So I think we're doing okay, number one. Number two, from a macro perspective, reports, whether it's data 1 or data 2, we know on the ground while investing in education that the various trends and indicators are all pointing up. Clearly, macro level, the market's about 100 billion. It is rising at about 10 to 20% segment by segment. So for it to get to 200 billion in a few years is not unimaginable. It's headed in the right direction. Therefore, we are not concerned that there is a slowdown of any sort. Everybody sends their kids themselves. Lifelong learning is taking over. There are many more mechanisms and avenues for spending money on education. So it's inconceivable that we will be worried about any kind of education trends, irrespective of the data that's out there.
So Kaizen is India's first education-focused fund. So how bullish are you on the education sector? And if you could elaborate on some of the sub-segments within the education sector.
I think it's an incredibly awesome time for us to be investing in education, whether it's India or globally. What is happening is that a lot of the opportunities for investing in education that didn't exist a few years ago are becoming real today. Let's talk about a few things. First of all, originally, like 10 years ago, if somebody started a school, they had one model to deal with, K-12 or a preschool. Now there's daycare, there's preschools, there's a school, there are mini schools, there are micro schools, there are home schools, there are online schools. At least 3 of those are brand new in the last 5 years, and at least a couple of those are going to become investable in the next couple of years. So the opportunities from an investment perspective in a segment of education that traditionally has been really behind innovation in terms of innovation are interesting. Take another segment, for example, skills development. Skills development, 5 years ago when we started looking at skills-oriented companies in India, we had a few. There were a few private players such as NIIT, Aptech, and a few other large ones, particularly in tech space, and there were very few others in other spaces. Now there are multiples in multiple spaces, from internet marketing, data analytics, design, development of talent and recruitment of talent. So the areas that have blossomed in the last few years have blossomed because there's a rapid shift in the skills needed, much more rapid than either the colleges or the corporates can take care of. So there is a private sector emergence of true, pure, premium professional skills training companies that didn't exist. Very exciting area. So third, EdTech is disrupting everything, where we focus a lot of attention on the ed part of the EdTech, where companies are looking at bringing in new methods of learning, new methods of capturing learning moments, new methods of understanding analytics-driven elements of a person and individual's learning patterns, and developing and deploying products and solutions that at scale solve infrastructure issues, efficiency issues, access issues, and also learning issues. So there are multiple opportunities that exist today. Last, and this is something to keep in mind, a lot of the global education frontiers are becoming less exciting. Latin America or China, for various reasons, for international players. India is now emerging and has been about to emerge for the last few years, but now it's getting there, where a lot of the larger education providers globally are looking at India as the next frontier, and Asia as the next frontier.
So now there's been a saying that education as a sector has not been disrupted through technology completely. Like there's still untapped potential there. What is your view on that?
Yeah, I think that's correct. I think that the fact that we are ascribing to education the same level of potential as any other sector is to be expected, but we must be a bit more patient for a few reasons. Let's compare and contrast education with a typical consumer business. In a consumer business, many purchases are impulse purchases. They're made any time of the day or night. Education purchase, traditionally for core or traditional education, are made once a year. And once the decision is made, the individual that decides sticks to it for years. A college, 4 years. A school, 10 to 12 years. So the decision-making process is deliberate. It's based on social information, other research, etc. It's not a quick decision. So for us to assume that a sector that has such long decision cycles and such sticky cycles of customer engagement will see sudden rapid transformation due to technology is not logical. But there are elements of the education sector where decisions are made much more rapidly, much more frequently, which are related to things like skilling, things like learning for a purpose of delivering a job, or maybe test preparation, where you have multiple tests a year, etc., which lend themselves to multiple decision opportunities, multiple disruption opportunities. So those segments will get disrupted faster and are getting disrupted faster. Other segments are getting infusion of technology, which enables them to be more efficient and accountable as opposed to getting totally disrupted.
Okay. So coming to your first fund, tell us about the investments that were made from the first fund and which companies have really scaled up well.
So we made 10 investments from the first fund, and they were all across this education segments. First, we had a couple of investments in school servicing companies, K-12 servicing companies. We had 2 professional skills investments, 2 daycare/preschool investments, 3 education technology investments, an education finance company, stuff like that. So each company is interesting. There is an education technology company called Impartus based in Bangalore, which captures lectures in classrooms, colleges particularly, and enables flipped classrooms, enables video analytics driven learning for individual students who can then collaboratively work with each other to understand which segments of the video, which therefore relate to the best segments of the class, are most interesting, right? So that's exciting stuff. And they are in 5 countries right now. They're a 2.5-year-old company. So there's a very exciting company called Varthana, which is in the school finance space. They work with affordable private schools that generally do not have access to any kind of finance, either through banks or NBFCs. They generally end up not scaling because of the lack of affordable finance. Varthana plugs that gap very nicely because its credit assessment method is not based on the balance sheet performance, it's based on the P&L performance of the school, which requires that they understand education really, really well. Another company that's doing exceedingly well is Founding Years. It's a company in the daycare space, particularly in corporate-sponsored daycare space. It's very exciting because they're able to bring women back to work. That, of course, helps the GDP. But even more interesting is that they are able to work with corporates to have employee retention. So corporates are willing to shoulder a bit of the cost that ultimately only the parent used to bear. Therefore, this becomes a wider, more scalable product, and they have expanded outside of India as well very nicely. So those are some of the companies that are doing exceedingly well for us.
We've essentially wrapped up the first fund.
Yes, we've invested the first fund completely.
All right. So we also understand that you're either raising or, you've raised the second fund at $125 million, and it's going to be a Southeast Asia focused in a fund. So the first fund only focused on India. So why was the decision taken to also focus on the Southeast Asian markets?
So let me clarify 2 points.
Okay.
First, we are raising the second fund.
Okay.
Within that, we are doing something exciting right now, and we'll be announcing something interesting soon. We've actually decided to transition, and the fund size target is 125 with a cap of 150. So those are just data I want to accurately represent. The decision to expand to a broader Asian region includes multiple reasons. The countries we are targeting are India, of course, remains the biggest target market, Sri Lanka, Philippines, Vietnam, Thailand, Myanmar, Bangladesh. These are the markets that we are targeting in that order pretty much. We like that because we can now do a couple of things we couldn't do earlier. First, we can take lessons learned in India, apply them elsewhere. They're very applicable. There's quite a few interesting quality deals in those markets as well, which we think can benefit from the lessons we've learned and gives us a competitive edge, number one. Number two, a lot of the education segments we invest in lend themselves to scaling through inorganic means, where you could imagine us investing in a chain of preschools, a chain of colleges, where one's located in Philippines, one's located in Sri Lanka, third's located in India, and be able to do multiple things with those colleges which have exponential opportunities created for student transfer, professors, teachers, curriculum development, technology, where we can have much more interesting academic results if we have a chain as opposed to a single institution. And that kind of is interesting also because we don't have to create an artificially large setup in a single country or single region. We can still keep it boutique enough, quality enough, and yet be at scale because we're in 3 countries or 4 countries. So we like that part of the opportunity this presents to us.
And how similar and how different are these South Asian markets different from that of India?
So, of course, they are different, right? Culturally different, market sizes are different, spending patterns are different, but there are similarities and significant similarities. Significant similarities in the fact that almost all of Asia views education as a critical part of a family's success. So therein lies the opportunity to believe that it will always be an important market for everybody. So, second similarity is most of these markets are in similar phases of development for most elements, most segments of education, except developed Asia markets, which are further ahead in education technology. But most other markets that I mentioned are at similar levels of development in other elements. So that's number 2. Number 3, a lot of these markets across geographic boundaries exhibit similar characteristics in various sub-segments of education. For example, Sri Lanka and Philippines are great hospitality markets. India, Sri Lanka, and Philippines are great BPO and IT markets, right? One would not imagine that a lot of the BPO, business process outsourcing, middle management staff in both countries are Indians, right? So there is an imaginable ability for us to invest in businesses that further deliver better quality BPO or IT trained employees to all 3 countries from centers which are locally located, but where IP is regionally developed, locally developed. So I think the opportunities cut across cultures because of similarities in economic structures of these countries. We like that.
And what about the exit strategy of Kaizen? We've not heard much about exits from Kaizen.
Yeah. So we've had 2 quiet exits, and we've kept them quiet because it's just a private business. We have 2 confirmed exits in our portfolio. We have 10 companies, and we are going to go through a couple more exits in the near future, and we're doing well.
Okay. And finally, what would be your message to entrepreneurs and companies out there looking to get investment from Kaizen?
I think engage early with us. Show us your thinking process, your development process, why you're building what you're building. Let us understand what motivates you and what drives you to build the company you want to build. And we should stay in touch with each other to understand where you're headed, and if the vision that you have developed is shared and something that we can help the entrepreneurs with. That's number 1. Number 2, we look for companies which have the ability to identify a white space and own it and sort of be the number 1 player in that. So if the entrepreneurs can identify that for us, that'll be great. So those are a couple of things, and we would love to be able to work with entrepreneurs in the region in education.
It was a pleasure talking to you. Thank you so much. And thank you so much for watching VCC TV.